The second way in which Singapore seeks to facilitate Asia's transition to a sustainable future is through the Green Finance Action Plan, which MAS launched at the FinTech Festival last year. The Green Finance Action Plan comprises 4 strategies. Strengthen the financial sector's resilience to environmental risks. Develop green financial solutions and markets for a sustainable economy. Build knowledge and capabilities in sustainable finance. And harness technology to enable trusted and efficient sustainable finance flows. Let me briefly outline the progress we have made under the first 3 strategies and spend a bit more time on the last, on harnessing technology. First, strengthening the financial sector's resilience to environmental risks. Later today, MAS will issue finalized guidelines for financial institutions to manage their environmental risks. The guidelines are among the first of its kind in the Asia-Pacific to apply to all financial institutions across banking, insurance, and asset management. The guidelines are comprehensive, covering environmental risks besides climate change, such as pollution, loss of biodiversity, and changes in land use. MAS will assess environmental risk in our supervision of financial institutions and conduct, by end 2022, industry-wide stress tests on the impact of climate risks. Second, encouraging the development of green financial products and solutions. MAS is providing grants to offset the certification costs of issuing green and sustainability-linked bonds and loans. We're promoting insurance solutions for climate risks. And we're attracting green funds and asset managers with a sustainability focus. And anchoring providers of sustainability rating and verification services. Third limb of the Green Finance Action Plan, building knowledge and capabilities in sustainable finance. We're working to anchor in Singapore centers of excellence to undertake Asia-centric research on green finance and build a talent pipeline. Just in October, we announced the launch of the first Research and Talent Development Institute focused on green finance, the Singapore Green Finance Centre, a collaboration between Singapore Management University and Imperial College Business School. Finally, let me focus on the role of FinTech in enabling trusted and efficient sustainable finance flows. We call it Green FinTech. For this year's Singapore FinTech Festival, the FinTech Innovation Challenge focuses on challenges faced by financial institutions with respect to sustainability and climate risks. The enthusiasm for applying FinTech to sustainable finance has been overwhelming. We received more than 600 submissions from over 50 countries, the highest number of submissions since the Innovation Challenge began in 2016. MAS is pleased to announce we will be embarking on Project Greenprint, a technology platform aimed at promoting a green financial ecosystem. Project Greenprint aims to strengthen 3 key elements in that ecosystem. 1, mobilize capital. 2, monitor commitment. And 3, measure impact. First, mobilize capital. SMEs and FinTech firms working on green and sustainable projects often face difficulty accessing capital in an efficient manner. Project Greenprint provides a platform for these firms to connect with financial institutions and investors to access a wider pool of capital and green solutions. Second, monitor commitment. Investors and financial institutions supporting green projects must be able to monitor whether the projects are indeed meeting their sustainability commitments. Project Greenprint aims to deploy technology at different stages of the supply chain to better monitor commitment to the relevant green standards and requirements. For example, IoT devices could be deployed on-site to directly capture and access relevant real-time data, such as energy and water consumption, by borrowers, portfolio companies, and suppliers. Third limb, measure impact. Investors in financial institutions want to measure the impact generated from their investment and loans against their sustainability targets or goals. Project Greenprint will explore the applications of AI and other technologies on third-party data sources, such as rating services and even crowdsourcing, to quantify the ESG impact of potential investments and loan portfolios. We will establish a consortium of financial institutions, FinTech firms, and industry players with expertise in green FinTech to drive Project Greenprint. The consortium will help to identify specific use cases where technology can play a role in addressing the 3 pillars of Project Greenprint. And we will be showcasing some of these use cases as well as the potential solutions during the Impact Summit tomorrow. And MAS will earmark 20% of the financial sector technology and innovation budget, or $37 million out of $85 million to support green FinTech projects. The funding can be used to support proofs of concept, innovation labs, industry-wide utilities, and technology platforms focused on green FinTech.